Our next slide is consumer price inflation, which, are you believing these numbers?
No, not really.
Do you think it's only 6%?
The way it's calculated has changed so many times, it's hard to keep up with it. It's a bit like the unemployment numbers. They've been politically manipulated for benefit. Certainly the feeling, I think, out on the streets is that prices, CPI, is far higher than 6%, month on month.
Well, I'll tell you what, I just picked up a new car today. It was just a Mazda, nothing to brag about. But the interest rate that my broker managed to get on that was in the 4%, which is remarkable.
Yeah.
But inflation's at 6%.
Yeah.
So my car, I'm getting it at a negative interest rate of 2%.
It's crazy. And this, you get back to the risk return curve, right? And Mazda's pricing probably out of a facility, Nomura, somewhere from Japan, where interest rates are much lower.
Well, no, this is local. This is a domestic lender.
But I don't know if the finance is domestic.
Yeah, right. Well,
you don't know how their wholesale, the capital stack might be made up of overseas capital, but that's incredible.
Well, the other weird thing is that I've picked up the car for at least a couple of grand cheaper than what you could buy a used one from a couple of years ago. And as one friend of mine said, I should sell it and order another one. But but what's interesting,
futures.
Exactly. So we see that inflation's up, and of course that's got to impact interest rates. Like, to me, that's the early signs of where interest rates cannot be below 6%. For home loans, for argument's sake, if inflation's 6%, it's a negative interest rate.
Yeah, that's exactly right. And I think the other thing about employment is we've got a lot of enthused small businesses trying to get into the market after COVID again, get reinvigorated.
Yeah.
A lot of zombie businesses that are going to trip over at some point.
Yeah.
We are seeing from our side a lot of applicants that are going through business restructure. We've had 2 in the last month that were loans secured against property to clear tax debt, significant tax debt, but also to buy out partners. So people are having a bit of a rethink, You can't change bank with the tax debt, so it comes through us. But the partnership change, I think people are starting to re-evaluate their business friendships.